Good afternoon, everyone. So the following video that you're possibly going to watch is basically an interview I had with Tanogi from DefiBetter. This is a really unique and interesting protocol opportunity, and this is an opportunity just for my community as well as a few other communities to get in at the ground floor. So this video could be used for other communities to inform theirs about this rather than doing a bunch of these videos. So it's an interview that I kind of had where we went through kind of a quick rundown of the project protocol and specifically on this token that you can purchase before the project even goes into pre-sale. This will be a limited release token that will only be purchased during this time, and once it's done, that's it. No more minted, nothing. And basically you can take profits on this token by burning it at different milestones. Before we get into the whole explanation of it, I did want to talk a little bit about security, about the team, and to give you some of my 2 cents on information on why I think this is worthy to possibly look into or investigate for yourself. Specifically, the team itself, I feel very strongly about them, but that's not I want to say that quickly, but that's not really the point to most of this intro. But the team itself, they've been around for a while. They have had opportunities with projects to rug and all that kind of stuff, but chose not to. So they've proven that they're here even though they're not KYC'd or doxed. But they've been in the space for over 2 years, in the DeFi space and in development for a while. But specifically, you don't even have to trust them. So as much as I do vouch for them and I do think that they're worthy to put our investments behind and stuff, you don't even have to trust them. You want to look at the system and what they're creating. And if you believe in that, then invest in it, because you know that based on that none of the funds are going to be managed by the protocol. Okay, this is a truly decentralized protocol, and it's actually using the technology the way it's supposed to be used, where there's a trustless system. Everything is a closed loop, all based on the programming, which they will get independent audits, even a bug bounty on at code for Arena. I'm reading some stuff just to make sure I don't forget anything. That way that they can cover anything that the audits might miss. So all that's to ensure the security, ensure this closed ecosystem has no bugs, no bridges, no anything for people to get in and out of or to take advantage of. The system will run the way the protocol is supposed to run, which is how, like I said, some of these DeFi products were always supposed to be. You put a contract out there and then it runs and it does what it's supposed to do. The issue is most people seem to just make the quick ones, or they create these ones where they can put money into a bot to create investment sources, which is cool, but DeFi as a whole is supposed to create this trustless system where the ecosystem is fully enclosed in itself and the program is what does all the work, and you don't have to rely on human interactions or anything happening, which is what this whole protocol is set up to do. That basically, that's pretty much anything, and that's what the DeFi is all about. So if you guys like what we're talking about here and you think there's some value in this protocol that's being created and that people will use the system, then I would recommend possibly taking a look at getting into this seed round phase, and possibly looking at this for a long-term play. So you're going to put, let's say, $1,000 in here. You're going to look at this for a while. So maybe at certain milestones you'll want to take some profit to try an ROI, especially if maybe you can take just a portion of it and get your 1K back, then great, maybe do that. But then you hold on it for a little longer, and as milestones happen, the value of the tokens will get bigger and bigger. And as other people take profits, your portion or your value in those different milestones will get bigger and bigger. So please enjoy this chat. Hopefully it adds some value. And if you do get interested, then please visit their Discord, get to know the team, come on by and say hi, and see what you think of it. Thanks so much, and enjoy the interview. But I have Tanogi from DefiBetter here. Basically, this is a really cool opportunity where we can get in at the ground floor, and I'm going to give him an opportunity to basically talk about all of this. We have a little deck that they've done up to go through all the details, and I'll be asking some questions or maybe putting out some clarification as we go through all the pieces. So looking very forward to having a chat. Tanogi, if you maybe want to just introduce yourself first.
Yes, thank you for having me. So we've been developing a little bit of a project for the last 10 months about. My team and I've been developer for about 10 years. I've been involved in the DeFi space for about 2 years as a developer of bots, auditing projects, investor myself, and have been involved in various communities and projects so far. And we found it's time to add something to the space now.
Amazing and great, and I like to hear that. Obviously, that your experience is quite in depth, and then in DeFi quite in depth, and not just as an average investor, but getting a lot more deeper in programming as well as auditing and kind of knowing the space in a lot deeper way. So that's amazing. So what we'll do is, as I said, I'll pull up the deck, and then maybe if you want to do kind of an elevator pitch, and then we'll kind of break it down into the different sections because you have quite a nicely kind of laid out information here that I'm looking forward to going through to show everybody. And the whole idea of this, I guess, is to kind of give an opportunity to seed investors, if you will, or people that want to get in at the ground floor to kind of kickstart your project, I guess, if you will. Correct?
Exactly, that's exactly right. So before pitching to VCs and going for the institutional capital, we thought it is important to diversify our investor base and give back to the people that actually enabled the journey of DeFi so far, and have the opportunity for Discord groups and individuals, retail investors, basically, to actually participate in those very thought after seed rounds themselves.
Nice, awesome, and I do appreciate that. So you can stop me or tell me to go forward wherever you'd like. I'll let you kind of control the environment and just let me know where you want me to go from here on here while we speak about it.
Exactly. So first of all, DefiBetter is a derivatives and price prediction protocol launching on Binance Smart Chain. It's a little bit of a perspective. Where do we stand right now in terms of macro? We have imminent upcoming regulations that are on the way in the US, in Europe, basically everywhere. Crypto is finding its way into the traditional space. Institutional investors will bring much capital into the next bull market and fundamentally shape it by this. So alongside this, we also have an increased demand for institutional products that comes with this, because market makers at the end of the day want to be delta neutral. They want instruments for hedging, namely futures and preferably options. Stablecoins are also very much in the focus of attention right now. They are put under very much regulatory pressure with the upcoming central bank digital currencies, and regulations that are in the making actually are very prohibitive of stable coins and yield on those. So this is a little bit of our macro, where we stand.
Awesome. And this is kind of a neat, and I've seen this before, and I think this is just a neat kind of breakdown of where all the money is, I guess, in all of the financial industries as a whole. Is there anything you want to talk to here, or we can just lead people here whenever they want?
That's exactly right. This is just to visualize graphically for a quick moment how big the derivative space actually is, because people think, oh yeah, crypto, it's going to be big, it's going to be as big as the stock market, etc. But actually the derivative space is what constitutes most of the capital, most of the volume, just to give people an idea for what we are looking at when we say, okay, institutional capital is going to come into the space and is going to have increased demand for derivatives.
Okay. Perfect. And yeah, that's awesome. And it is a mind blowing, nice, just to go back to that, a mind blowing kind of idea of how big it is, even compared to real estate and all this stuff. So if nobody's ever seen this, it's definitely worth having a peek at. It's very informative and kind of eye opening as to where everything is. I'm assuming this is also including stuff like venture capitalism and that kind of stuff where the big dollars are happening in the market.
Exactly.
Right?
Yes. Yeah. Yes.
Awesome.
Right. So our product is looking forward and capitalizing on all the upcoming institutional capital and demand for derivatives like products. Furthermore, in terms of regulations, we have immutable contracts that are deployed on chain. And from that point on, the team is detached from those. So there is no management of funds in that sense that would make us classified as a security outright, for example. But we really go the way of putting stuff on chain, leaving it there. And trusting the code, right? So everything is fully transparent. We don't use proxy contracts that would be upgradable or anything like that. And on top of that, we're dealing exclusively in native gas tokens. So there is no risk of stablecoin regulations. You don't have a basket of stable coins and 1D pegs or something. So we really limit the risk and increase the user experience on that end.
Nice. And I actually get that too. And I don't think I noticed that when I was reading through it. So yeah, the idea of you guys having these immutable contracts on the blockchain, there's no outside influence or anything that we need to worry about. Like you say, like a stablecoin depegging or government regulation. So that's really cool. Awesome.
Exactly right. Yes, it's really the contracts. They do what they should be doing, and there is no outside influence, only in gas tokens.
Yeah.
So really as simple as it gets.
Nice.
So
So
what
why?
actually,
Yeah, go ahead.
yes,
Sorry.
well, what actually is DefiBetter? As I already said, it's a derivatives and price prediction protocol launching on Binance Smart Chain. And in the future, we're aiming to go cross-chain as well. The capabilities for that are already in the code, but we want to incrementally improve our product. And DefiBetter offers fast-paced gains as well as long-term strategy vaults and higher profit margins. So you can think about it as some kind of platform, almost like an exchange, where you can have a different approach to speculating on the value of assets. So it's more like a medium than something that you would buy. It's actually a platform that lives from its usage.
Nice. And I guess with that too, because it's a separate platform, you're not having the manipulation that happens inside exchanges, as well as the fee structures that you don't really realize even until you go through it all, that are kind of bleeding your money from you practically. Even if you think you're gaining, oftentimes you're not. Correct?
Yeah, this is exactly right. And I'm very glad you bring that up because on the next slide, we have a
Oh, there we
little
go.
bit of a problem outline. Yes.
Yeah.
What do we face in this space right now? Due to high fees and low liquidity, it's very hard to make money trading in DeFi. If you go to your favorite DEX and you get in, get out, you have slippage, price impact, all those things that are affecting your trades and eating away at your fees. Instruments like futures can make it easier and seek to alleviate some of those problems. However, they introduce other things like liquidation risk and, ironically, even more fees for leverage. So while you have more upside potential, you are also at risk of your position getting obliterated outright.
Yeah. And we've definitely seen and heard of that.
Yes,
So yeah,
exactly.
perfect. And I
So
guess
what's the solution to this? Yes.
yeah, perfect. And I look at the solution. And I also maybe want you to hint on like kind of what because I think when we first started talking, I was kind of my question was what kind of investors does this protocol kind of appeal to? And I think we're going to get that later on and throughout this, but maybe this is a good time just to kind of hint on that as to why are we asking everybody to have a look at this and be engaged with this information.
Exactly. So we have different tendencies in the market right now. We have on the one side people that just want to get in, get out, don't want to take on long-term risk on any investments. They can use the platform for things like almost day trading, speculating on price very successfully with advantageous fee structures. We but also have a functionality that appeals to swing traders that have a time horizon of days, week, month.
Mhm.
And on the other hand, we also have something for people that say, okay, I do not want to speculate on the market at all. I just want to benefit from the growth and from the prospering of this product, of this platform. And I want to actually be able to get the fees off of this. So we have something for everyone from the most risk happy to the most risk averse people that are catered to here.
Nice. And then I
So
guess that's kind of yeah. Go ahead. Sorry.
why would you use DefiBetter to trade? First of all, it's easier to profit since we take fees only on gains. That means if you come in with $100 and you make $10, then we take fees on those $10. And if you lose $10, then we don't take any fees at all. So you don't have this uphill battle outright. So
Yeah.
we only take fees if you have a good experience, if you are in the green. Then furthermore, we have leverage without liquidation risk. So you have more price exposure to the underlying assets than if you would buy them outright. However, you are at no point at risk of liquidation. And we also don't have any binary outcomes like you would know it from other price prediction protocols, right? Where you
Mhm.
just say up or down in a 2-minute time frame and they take 5% outright. So where you basically can't win.
Gotcha.
And lastly, we have the ability to trade on volatility. People coming from the traditional space might be more familiar with the term. Volatility is basically the extent of moves over a certain time without actually predicting their direction. So if you say, okay, I know there's a big event coming, but I'm not sure which influence it's going to have, either we go up drastically or down drastically, then you can bet on that using our platform. Or you could also say, okay, we're in a crap market. We just move sideways for now. I want to bet on low volatility. And this is also possible with our product.
Nice. Okay. I think that explains that well. And here you guys are.
Exactly. This is our team. For people agile, fast, and experienced, we have basically 3 developers and our marketer Chance. I'll just let people look at this real quick because I don't want to take up too much time. Basically, our developers are all very experienced in the space, have at least 10 years experience as developer normally, and at least 1 to 2 years in the DeFi space. I myself already said something about my experience in the beginning, which also includes cybersecurity, which is very crucial in making the contracts actually secure. And our marketer Chance is also very versed, has been involved in a whole lot of projects, and yeah.
Awesome. No, that's great. And how does it work?
So yes, how does it actually work? Where does the magic come from? So for that, can you pull up the next slide, please?
Sure.
Yes, because it's way easier to explain it
Visuals.
with a little bit of visual aid. Yes, exactly. So as you can see on the right side there in light blue, we have 7 bins. The top 3 of those are the bullish bins, the lower 3 are the bearish bins, and in the middle we have a neutral bin. What you do when you come into the protocol is you deposit native gas tokens. So in the case of Binance Smart Chain, BNB, for example, in the bins where you think price is going. So very, very simple. You think, okay, price is going up, then you put it in the upper bins. And how, depending on how bullish you are, you put it higher up. You're not limited to one bin. You can spread it across different bins, however you want. Then everybody does this, all the participants, including our strategy balls, which we'll hint at later. And when the epoch ends, so we progress in those predefined time intervals, which are very known in DeFi. When the epoch ends, the capital that every user has been putting into this collective pot is redistributed to the participants. However, it's redistributed according to a custom formula we wrote, where basically all the magic is happening. This formula takes plethora of things into account. For one, when you made your prediction, right? Because when you predict earlier, you should get a higher reward. How correct your prediction was in relation to others. And this is where a lot of the magic lies. So you don't need to be exactly correct. You just need to be relatively more correct than the other participants. And this is a very, very big key factor that differs from normal trading or speculating, because this is a very new concept, but brings several advantages. For example, one of those is you cannot lose your entire position, because in order for that, you would need to be infinitely wrong, which cannot happen. So no matter the outcome, you definitely preserve part of your initial investment, even if you should lose capital. And the nice thing is, the more exotic your market view, the more you stand out from the masses, the higher your leverage, the higher your gains. And lastly, we take into account how much capital you actually contributed, which is a display of your conviction in your prediction, so that you are actually able to say, okay, I'm really, really sure about this.
Nice.
And
go ahead.
Yes.
Yeah, I guess I was just going to say, and I think, and you probably were going to get to it, is I do notice on here an epoch start and a buffer start, which I'm assuming is when people can't be putting any more kind of predictions in.
Exactly right. Yes,
so you
we
can't
have
just come in the last second and go boom and win, kind of thing.
Exactly. We have taken into account lots of attack vectors in terms of manipulation. Since I was also working in the security space and I was also auditing projects in the past, I'm really aware of those things. And therefore, we have those buffer zones. However, at any point in time when you come into the protocol, when you visit the website, you can always place a bet. It's just that we basically have 2 instruments, right? So that one of those position opening times is always present, so that you can always actually use the protocol.
Nice.
So at the end of the epoch, the capital gets redistributed amongst the participants. And from the people that are actually realizing a gain here, which will always be somebody, right? Because if A loses, then B wins, and vice versa. The fees are taken only in gains. And now comes the especially interesting part for investors. They are fully emitted to stakers of the protocol token BETR and holders of our incentive token DBMT. So all the fees that the protocol makes are actually going towards token stakers. There is no share retained or hard-coded or anything. So basically, one token entitles you definitely to a fixed part of the cash flow in this project.
So in that case, just to kind of wrap that up, then it's not going back to dev fees or team fees or anything like that. The only way you guys can make money on this is to also stake your own tokens.
That's exactly right. That's
And will that
exactly
be,
right.
will you guys get tokens to start with, or is it just you have to put your own money in to get in it as well?
Yes, we reserve the freedom to actually give some tokens to ourselves since
What?
we built the protocol, of course.
And I get that.
And
I wasn't trying to set you up for that. I just wanted to make sure
no,
people
no,
were aware. But
it's
yeah,
perfect. No, the people need to be aware of the distribution of things, of course, and we have a dedicated slide for this.
yeah,
So we retain a small portion of the cash flow. If you can think of it like a company, for example, normal companies would maybe offer a couple percentages of
mhm,
their entire cash flow in stock, right, and sell that off, but always retain the majority. We took a different approach though, and only retain less than half of the cash flow in all of this, basically.
okay,
And a vast amount also goes to various incentive programs.
perfect, awesome. And then okay, and this goes through the profiting.
Exactly. This is a quick overview. People can pause the video to have a look at this in more detail, or
Sure.
also in our marketing material that we released so far. This basically goes over the different roles you can take on in the protocol that I already mentioned. We have the short-term speculator that puts in gas tokens, gets them out at the end of the epoch. Then we have a strategic investor, which can use our strategy vaults,
Okay.
which basically automate this entire process for you, right? They participate in every single epoch. You put your BNB in, and then you come back later, maybe a day, maybe a week, maybe a month, and then you reap the profits from this strategy vault that is automatically applying a certain strategy regarding distribution of those funds, and is subject to drastically reduced fees as well. And then
Yeah,
we
and I
have
guess we'll probably see that later on, and that's the one thing, this kind of goes through it almost prematurely, but yeah, we just showed you the first way to get into the protocol here, but as people can see on the top, there's these different ones, so I'm assuming it'll break it down a little later, but that's what's cool about this is you can be as involved or as uninvolved as you'd like, either daily, weekly, monthly, whatever you want based on your strategy, based on what you choose, which is pretty cool. And
exactly,
yeah, so
exactly.
great.
So we
Uh,
capture a vast market share in terms of people that are actually going to use this, because there's a big community that just want fast adrenaline rushes and they want to get in, want to get out, turn a profit. But we also see in DeFi a tendency towards more long-term holders, more actual investors,
mhm.
which can be our strategic investors or our risk-averse investors in this graphic.
Yep, awesome. And then we'll go down. So a couple of
Right.
great little breakdown.
Right. Just as a quick reminder, some of our advantages are we have liquidity aggregated in this pot. So we unify basically the roles of liquidity provider and trader due to our strategy vault. So you can imagine if you put in a bunch of capital into the center bin, that's basically delta neutral, right? You don't have directional exposure in that sense. So the center bin always wins statistically over time. And you are not being punished in terms of impermanent loss or anything like that for providing liquidity. Since you have the statistical advantage, you just gain and gain and gain fees from people participating as day traders, for example.
Nice.
100% of our fees are emitted to BETR stakers. By the way, also in native gas tokens. So you stake your BETR and you get BNB back. You have cash flow that you can actually use and go shopping with. We have those vaults that are already mentioned at drastically reduced fees. And you can profit if price does not change, right? If we have a month-long episode of price not really moving much, the center bin or the center vault strategy would be the place to go. And in
Nice.
terms of assets that we're going to launch with, we have BTC, ETH, Doge, SPY, and gold. So SPY is the S&P 500 ETF. So we basically have a vast spectrum from a very quote-unquote degen, very adrenaline-fueled people to very passive, very long-term investors here. And
Nice.
we can evolve this naturally based on our Chainlink oracles that we are using for this, in whichever direction the protocol evolves and whichever is the preference of people.
Nice. No, great. And that's why I'm assuming that even means like going to Arbitrum or something like that, because that one's obviously getting a lot of exposure right now, I guess.
Exactly. Cross-chain is planned, as initially mentioned, yes.
Yeah, nice.
Over the next slide, I would just want to skip. This is basically a comparison leverage trading in DeFi, which gives a bit of perspective. People can pause the video and read
Sure.
that for themselves. And then we get to the juicy part, DBMT. So we have two tokens, basically. Our main token is BETR, and our incentive token that we are offering in the seed round is DBMT. BETR and DBMT are not that different. However, we have some differences which are listed here. They both have intrinsic value. That means they entitle you to a share of the cash flow in the protocol and give you real yield. BETR has a constant share of the cash flow, while DBMT has an increasing share of the user's cash flow over time. So as time progresses, your share in the protocol cash flow grows bigger and bigger and bigger. BETR is a liquid token. That means we have a liquidity pool where you can buy and sell it whenever you want. And DBMT is a token that users burn in order to claim rewards, like a vault share.
Yep.
And there's a lot of detail on how this exactly works in our Medium article regarding DBMT. We can have a look at the next slide where I can quickly outline the functionality of DBMT.
Sure. And I think, well, actually, maybe I'll just go to that one, just go through that, because I did want to mention this, because obviously at the end of this, we'll recap and go through a kind of a call to action for people. But it sounds like the DBMT, and I've looked into it a little bit, is the one that people can get now. And the neat thing and how you've done it, which I think, yeah, is right here, is that the longer you kind of stay in it, the more opportunities you're going to have to grow, but you can still kind of take profit. If you have a few of them over time, you can kind of take bits and pieces out of it in order to kind of take profits, which is really cool. I like this design. So I'll let you talk to this a bit.
Yes. So DBMT stands for DefiBetter Milestone Token. We have a milestone reward program. On the right side, we have our milestone reward pool. So as certain volume milestones get reached, so we have 1 million cumulative volume, 2 million cumulative volume, and so on, the fees from that, so we set aside 10% of BETR's total supply, and those fees that those 10% accumulate go into the milestone reward pool when a milestone is reached. And now we have on the left side the DBMT holders, and at every stage, after reaching the first milestone, at any point in time, they can decide to burn their DBMT to get the respective share of the milestone reward pool. Then the next milestone is reached. The reward pool increases. We have fewer holders, and thus the share of the reward pool per holder is increased, while at the same time, the reward pool itself is bigger. So you have growth in 2 dimensions, basically. So the amount, the worth of your DBMT increases exponentially, since at every stage we will see people actually claiming and getting those BNB out. Again, here also real yield. And if you burned your token, it's gone. So you need to be mindful of when you do that. However, the more successful the protocol is, the more you actually make. And the longer you hold, the more you make. So holding it is really the way to go. And it basically benefits everybody. So this is why this is our milestone token, and your share in the cash flow increases over time, since your share in this pool increases over time as other people claim. And even if they don't claim, the pool still goes up linearly.
Yeah, I was just going to say, so even if there's really no mechanism where this can go down, even if the protocol is not being used, there's really no mechanism where this can go down. It's just obviously, yeah, awesome. And obviously, I don't want to give away all the stuff. There is a Medium article. We'll maybe get the link and put it in the video for people to go to if they'd like to do some more deep diving. And I'm assuming the idea behind this as well is that there's going to be no version of this token to purchase after the protocol launches. Is that correct?
Exactly. This is exclusively for our seed investors, since it's such a unique opportunity of increasing cash flow over time. And the funds from this are going to be used to fund our audits and initial marketing. And we have this opportunity right now before we actually pitch the whole thing to VCs. And we want to give back to the community, which is why we are offering this in the digital space right now versus just going to TradFi.
Nice. No, awesome. That's great. So yeah, I just wanted to stop on there for a minute because it kind of is the raison d'etre for this video, I guess, if you will. So
exactly.
awesome.
Yes.
Perfect.
Right. The biggest gainer mechanism is a tiny little incentive program, which we also have in place. A nice little self-balancing cycle. People can just go over this themselves, since we don't want to expand the video for too long.
Yep.
So on the next slide, we have our roadmap to give a bit of perspective. where we actually are right now. We're in the DBMT sale. The next thing after concluding this are our audits, during which we will increase our marketing as well. Then we have the BETR private sale, also to communities that we've worked with successfully in the past, where you can get a 35% discount on our token on BETR, then the public sale, and eventually the launch.
Nice.
Now for the tokenomics real quick. In lots of projects that I've been involved with in the past, or that I helped with, the tokenomics were fundamentally flawed in the sense that the team needed to sell their own tokens in order to profit from the protocol, right? In Toonforks, for example, teams would get an emission, would need to sell the token, but that obviously hurts the community, right? So you are kind of in a pinch. Do you sell the token? Do you keep them? And we usually always went with keeping them, but this leaves the team unrewarded. And the solution to this is aligning the incentives, which we can find on the next slide. The incentives should be that the team profits when the community profits, and vice versa, right? The team builds out the product, and if the product prospers, the community and the team alike get a share of this growth. And this is exactly what we're realizing using our tokenomics, since the team and the community and the investors hold the exact same tokens with BETR. We have an alignment of incentives, and if the team did a good job in developing the protocol, then everybody wins basically, and the team has no need to actually sell the tokens. They are the primary way of profiting from this is to stake the tokens and get the cash flow, and this is the idea behind it.
Yeah, and keep it in there. Nice.
Right. Here we have our distribution. This is derived from a 7-dimensional optimization model that we wrote, which takes into account the BETR staking APR, LP staking APR, price performance, etc., and volumes that we anticipate. And as we can see, we have 28% of this entire cash flow of our product retained and linearly vested. So it's also not circulating right on launch. And another 7% of the team, which is completely locked. So this cannot be sold at any point in time. And the vesting rate, the vesting schedule over 24 months, we also chose very, very long, because for once we have an insignificant share of the total supply. And on the other hand, we have a very, very fast development of things in DeFi. So 24 months of release is going to be soaked up by normal volatility in the price development, even if we would sell, which we have no incentive to, right? Because if everything is going as we planned, then we have constant volume, constant cash flow. And additionally, we are going to use 30% of the funds we raise in our normal sale to subsidize our strategy vaults right on launch. So there is deep, deep liquidity in those. So we definitely have this cash flow secured.
Yeah, nice. And yeah, and it incentive again. I get that, because you're really going to be earning your rewards back over time, and that's the idea. And so you'll already ROI by the time your tokens are vested, so there'll be less incentive for you guys to sell as a team, anyways.
Exactly. We simply have no incentive for that. Yeah. We win more if we keep the tokens. The protocol prospers long term. And everybody that's familiar with the projects we've been involved with so far knows we have a very good history at that. For example, we took over Kitty Finance. The contracts were not renounced. There was $500,000 in there that we could have rocked, but we didn't. We stayed there with the project. And we even put our own money in to do our best to make investors even.
Nice. Yeah, I remember that. That's awesome. There we go.
And on the end of the presentation, we basically have a few projections. I don't want to bore people that aren't into this with math right now, but the gist of everything is we went with really, really pessimistic estimates. We had a look at betting protocols. We had a look at derivatives protocols in the space in order to gauge which kind of volume we can expect, to really make pessimistic assumptions. And from that, we derived our token launch price. By the way, BETR has a fixed total supply, right? So no inflationary emissions or anything like this. So people can be assured that they have a definite share in cash flow when getting BETR or DBMT, which basically represents 10% of BETR.
Awesome.
So people can likely find the pitch deck in under the video as well, where we
Sure.
can see where the actual data comes from, which assumptions we've been making, and that even in worst case, even if we just capture a tiny fraction of comparable protocols, we would have a very good floor APR. And if you skip one slide ahead, we also see that even for very pessimistic estimates, for every 100K volume that we see, we have roughly 7.68% APR on top. So even small volume increases drastically improve the APR. And if you look at protocols like GMX with around 200 million volume a day, even in a bear market, then you can do the math yourself.
Nice.
Right, and this basically outlines this fact further.
Nice.
The potential volume that we have here is also another assessment we made. We looked at, okay, what's the actual volume of these protocols, of these derivatives protocols in relation to their market cap? And this seems to be ranging from 2.5 up to almost 400. And if we were only at the lower end of things, which we can see on the next slide, if we were only at 2.5% daily volume in relation to market cap, then this would basically lead, based on launch price, which we are offering right now, to around 900% APR. So very juicy rewards, especially in a bear market. Of course, this is based on launch price, and the token price will then pick up to account for this.
Exactly. No, that's great. That's some great data, and a lot of in-depth analysis have gone into this, which it shows in just this. And I know you guys have even more stuff in that pitch deck that goes into deeper detail, which is amazing. And I guess
exactly.
that's it.
And this QR code leads to our website, DefiBetter.finance.
Perfect. Awesome. So thank you very much for that walkthrough. And I think that goes into a lot of detail. And like they said, there's a lot more data that you guys have that I think people can get into if they feel they want to do a little bit more deep dive. For now, I guess if you want to just summarize the call to action for the people that are maybe watching this right now in my community and the few other communities that I'm very heavily involved with, of what they can do to get involved now. And we've already kind of gone through the benefits of that, but maybe just a quick elevator pitch to end us off.
Exactly. So the call to action right now is to consider if DBMT is something that would interest you due to its nature of an exponential increase in cash flow. This is your opportunity as a community to actually take part in a seed round, which are usually reserved to accredited investors and institutions, which we will also give this opportunity to in the coming 1 to 3 weeks. So the time window for this is actually closing.
Yep.
Yeah, but we definitely wanted to go out to the communities and give them a chance to actually get into something that has a valid value proposition and that brings value to the table and isn't just a fork, because usually those things are only offered to VCs, and I think that's a shame.
Yeah, exactly. No, and I appreciate that. And it's taken us a while to kind of get together and get this all finalized up. But I think we've got a nice little kind of 30-minute kind of prologue on what this is all going to be. And hopefully we'll give everybody a good idea. I will add chapters in the end of it just to let everybody be able to digest it whatever way is best for them. And hope that people take a moment to take a look at this, because I think there's some definite opportunities of getting in the ground floor with something like this, and long-term gains as opposed to just a pump and dump is quite apparent here. And again, you guys have been in the space for a while. I know you're not on camera or anything like that, but I believe, is there anything else in the background, I guess, just to give people comfort that are maybe thinking about that, because we're not on camera right now? You've done a lot of stuff in the space. I know you've been here for a while. I put a lot of value in that as opposed to being on camera or doxed and that kind of stuff. But anything final thoughts on that for you and the team?
Yes, definitely. I guess I'm very well known amongst a few people in the community from the circus, for example. We've been warning people about drugs right and left. We've been putting a lot of time into that. When we took over Kitty, we left 500,000 untouched. So I think this definitely speaks in favor of which values we actually hold up and which things we go by. And of course, our entire team would be very well technically capable of churning out solidly forks or releasing stuff on new chains to just turn a quick buck. But we are at a stage where we actually want to add value to the space, and we want to give back to the communities, which is why we are offering this opportunity here right now.
Awesome. Yeah, no, and I get that, and I wasn't trying to put you on the spot, but I just thought it would be good to have a little chat there. But yeah, you guys have been here for a while. I know of you guys through your projects that I've seen over the past, and again, all been above board and handled with professionalism in this space. But I do really like how you're maturing the products that you're bringing to the table, and this one is definitely a leap forward for you guys as a whole. And as you say, you've been 10 months in production. This isn't a fly by night ecosystem you're creating here. It's something with some big robustness and something that's very different for this space. So I definitely stand by that and what you guys are trying to do. So I appreciate your time. I think that's about all for now. We'll wrap this all up, and I'll get some stuff put into there and edit it out, and just get this out to my community, and then try and find some other places to bring that to for you to help find some investors for you guys. So thank you so much for your time.
All right. Thank you so much for having me. Have a great day.